Yes, sounds looks all right. So today the market opened over here, and that's where the low bot strategy is applied. So got a quick rent on this. Just got in here, got out there, and then waited through this, got in here again, took a quick sell here. Then I got in here where it whipped me again, so this profit was gone and sitting on kind of break even. Then there was another pullback available on this, but once I get whipped here, I don't take it unless it breaks the low of this. So then I went short here, and after this I just left it alone. Started looking at other things. Price start going up and down. I'm looking for this to cross, and this is where I'd set up my, well, I was setting up my pending orders for setup one short here. Now if Frank is watching, hold on, that's the area. So let's go to 10 o'clock, the vertical line here. There we go. Now for the setup one, you first want the market to be sleeping like this. So over here it looks like a setup one, right? It is a setup one. So we have a 3 down, we have a peak of AO, there is divergence, but we consider that as the divergence of the wave down. So, you know, if I count this wave, it would have been something like, let's call this internal move down as a wave 1, and then you have a 3 down, 4 up, and a 5 down. Now the reason I count this as wave 4 is there are 2 reasons in there. One, you have the peak of AO here, and then when the dark bars begin and price starts to go back up to the gator, this is that particular pattern that I talked about in my stream the other day as well. And it's a pattern that repeats itself all the time. In price action world, it's the zigzag, it's the ABC correction in Elliott wave. And for us, we call it the PC pattern. So I've named all these patterns. Maybe some of them are already been found and stuff, but I just use my names because, you know. Oh, hi. Hartmut Koitze. I hope I pronounce it correctly. Max, good. So this pattern itself, the PC pattern, I mean, you can make a living out of this. Just wait for this pattern to appear. And this looks like as if, you know, it's a deja vu. I see it all the time. So you have a peak of AO, then it pulls back to the, there's a stepping down box. That's important. So it happens in 2 occasions. Once it happens within wave 1 and 2. And the second time it happens is between wave 3 and 4. But that's within an impulse wave. So when there's an impulse wave, so for example, this is an impulse wave, right? A wave 3 down. And within that, price is moving strongly. So now you know that it's moving strongly correctly. And it's right after Frankfurt Open, the pre-market session. And as it pulls back, it does this ABC correction. And when it does this ABC correction, so check this stepping down pattern. See here, there's the step down and down, but then price tries to break this level. And that's a challenging point, because if price breaks this level and continues to go up, then what you thought was a down wave is now ending. But during a strong wave, a wave 3 or a wave 5, what would happen is that as soon as it tries to break it, you'll see these fake out candles. You'll see these candles with long wicks, you know, like pin bars and stuff like that, right? This one here, this one here. And then it drops immediately afterwards. So what it does is that it creates a box high, which is higher than the previous one. So one box has broken the sequence of the bearish trend, but then it resumes. And this is a very strong indication, this ABC, of the middle of the wave. So this becomes the wave 4, and it's usually followed by wave 5, and AO will diverge. Now this pattern can then be expanded and can be seen on any time frame. I can show you it on monthlies and weeklies and dailies and stocks and commodities and all of them. There's another pattern, this same PC pattern, when it happens in the beginning of the wave, it indicates the wave 2. These are very difficult to find because when wave 1 and 2 happens, there is no structure to the market. Price is going sideways. So you can't really call it a wave 1 and 2, but you can have an idea of it. Because you know that if it breaks this level and then the next wave becomes the 3, then this could be the indication. So here we had that break of the pattern, but it was just information at that time. You couldn't trade based on this. You could have traded here, but when you have a clear peak and then it pulls back, you have a clear PC. So that's one thing. And now another thing is that because this is a 3 on the 5 times lower time frame of this pattern, this will be the setup one. Right now, so at the London Open, what does PC stand for? It's the, okay. I make some terminologies and cute names for the patterns that I've been finding over the years. And sometimes I name a pattern which is already out there, right? Everyone else has found it. This is the ABC pullback in Elliott wave terms. Sometimes there's a clean ABC pullback, the zigzag in price action, right? You see it here. Let me just mark it. Zoom in. Hold on. Here we go. So if I hide the gator and even the box, you will see that you will see this A, B, and C. And you can actually mark this, clearly as an Elliott wave A, B, and C. Now, because the zigzag is the Elliott wave pattern of A, B, C, and based on the C, when there's a fake out, I created a concept and we called it the principal C. So that became PC. There's even a little PDF about it, a small PDF to identify this, because if you learn the ABC pattern, you can make a living out of this. Like, all you need is just price this oscillator here when it peaks and when it tries to pull back, right? And it must not go more than 50% up. So if we bring do I have the fib retracement? Okay, here. So for example, here, you look at it, it's perfect 38% retrace on this one. So usually PC would be between 38 to 50%. When it goes to 62%, now there's another interesting thing. When it goes to 62%, usually indicates that it's forming a wave 1 and 2. And maybe your next wave is going to be 3. But Elliott wave things are not always perfect. So going back to a normal setup, I just explained that. So this is our 3. And when I look at the chart, I don't look at all these, I don't make this up, or maybe probably my brain subconsciously has already seen all of this. When I look at it, all I want to see is peaking AO, and then I wait for the gator to sleep and AO to cross the 0 line. So Frank, if you are watching this either live or later on, the idea is this. Gator's open, 3 lines are going down. If there's no divergence, that's even fine. But as I explained, that when you have divergence, you have evidence that this is a nice, lovely 3 down. Now, when a 3 down happens, then you will have ABC, or a wave 4 of the current time frame. So just before London Open, it created a nice setup. It did break 5 minutes before, but then that created another level here. Now the box was high, I did not really like it, but right at the London Open, this candle here, it was a bearish candle. So if you see that pattern, it almost looks like ABC again. So if I go to the 5 times higher time frame of this, which would be 5 minutes, see this? That same PC pattern appears. You have the stepping down, see here and here, and then this one is a bearish candle and it breaks the sequence, but it does not break the trend. So I'm thinking, all right, we have another PC. So my wave 4 of the 1 minute chart, let's go back to the M1, has created a wave 4 and I want to go short. So I did go short over here, but because I used tight stop loss, I got out. But if you look at it, technically, if I was going to go short here, my stop loss should have been up there because that's the peak of wave 4, right? But I didn't because because box was big and I want to get out quickly. I don't want to have a full 1% loss. Get kicked out, and then I got back in here again because price did not break the high, so the premise of setup 1 was still valid. Now we would watch how what we thought was a wave 3 would now become a wave 1. Watch this. So this is the peak here. And as soon as price breaks out here, then pulls back, that creates this peak. And by the way, when you have the fresh cross and you have the first 1 or 2 dark bars, this is what we call the monarch pattern. Because this pullback would always indicate the 1-2 within the next 3 down. So usually volume is less in the pre-market session, which is the 7 o'clock Frankfurt Open to 8 o'clock UK London Open, which is the actual open of DAX. Volume is not that high. And usually when you see a 3 within that period, and when price starts to go sideways, normally when you take the next wave expecting it to be wave 5 and volatility kicks in, the move is stronger than the wave before. So that turns the new wave into a wave 3. And we confirm wave 3 by looking at this. So as soon as this histogram low was lower than this, we knew this was the new 3. And I could sense it even before that because, you know, price was moving strongly. And then when this second move happened, that's it. We're done. So the beauty of this is that if you waited for this and you're not the breakout type of trader, I like these breakouts because they're not just pure breakouts of a range. They're not breakout of a range. They're breakout in the direction of a trend. So the trend, the bias is from the 5 minute chart. You know, the gate is already open and this purple is hovering above. And that's what creates the setup 1. We want the 3 down, gate are open, and then when it sleeps, you don't want this purple to mingle inside the box. It's just hovering above like a cloud, right? That's what creates setup 1. If price was to go above on the other side of the purple, Elliott wave might still remain as wave 3 and 4, but for our purposes, based on our rules, it's not a setup 1 anymore. So this was a setup 1, a successful setup 1. Pulls back. I had a short here, quick scalp. Then it pulls back, and this is what I call the pullback entry. Now, I fail to acknowledge that I don't like candles with long tails as pullbacks. I want well, the type of pullback I want, I'll show you in a bit. But I don't want these type of candles, you know, like a reversal candle and then I take a pullback. I don't want that. I want the normal kind of pullback, 3 or 4 candles, and then it comes down. And there's a reason why I do that. Anyway, usually when the first pullback entry fails, the second one has even a higher success of chance of success, particularly in this one. So I went short here. Price went up and retest those levels. That's very interesting. I love doing this analysis. See this? This is where market was stuck around that time. It breaks out, comes back to it, retests it, and creates this bearish candle, which was followed by an inside candle. And both of these are inside candles of this candle. So entry below this was a very good entry. So a pullback second attempt entry over here, especially because this candle is touching the lows of this box. It's really beautiful. But if you don't enter here, then this was the latest you could have entered. The low of this, break of box, becomes a setup too. So this is a monarch seed over here. This is what we call the hunt pattern. So the hunt strategy based on pullbacks. So this is the monarch pattern, and inside these two stripes, you will have these two inside candles, especially this one, and you can go below the low of this, or when this cherry was created, this is the cherry signal, right? You could have gone below this one, and if none of those, then the box low was available, and we took this trade. And that's it. After that, it's all fun and, you know, it's all dandy. Then, once again, see this PC pattern? We're seeing again the same PC pattern. Here we go. One more time. So again, an entry could have been made. PC pattern with a pullback. Beauty. So again, you have a peak of AO, a pullback. So if you just understand, get one thing from this stream or this video, the PC pattern, it's a pullback entry, an ABC pullback with a PC pattern. That's it. You can make a living from this. And here we go. So this is your bearish candle, although it's green, but it's got this tail poking out, and it's a fake out. So you go short on this. Now what happens here is that it fails to break the low, right? And then it turns around. So maybe you took a small profit on this, or a break even, because there was no continuation. But usually when there's something strong going on, then usually it would continue go down and AO would diverge. In this case, there's still a divergence, but there was no continuation. And this became a new wave 3. And when price started going sideways, we were waiting for wave 4. Now, I laid down all of this to bring it to this point to explain to Frank. Now, I had said goodbyes before the stream. I've already said goodbyes in my chat room and everything. But then Frank was asking questions, and I thought, okay, let's do this thing. Okay, so we were waiting here, and I remember one of the members asking the other one, are you waiting for a setup 1? And she was waiting for it. And this was the time to wait for setup 1 over here. Why? Because you have again, that same situation which I explained over there. You have a 3 down. You have at least one dark cross of 0 line, one green bar. Now, as soon as this happens, you start waiting for setup 1. This is exactly the strategy that I use for stock trading on the daily chart as well. And I have a particular scanner in TradingView that looks for these crosses in this situation. And we find hundreds of stocks. Anyway, so here's the pending order went live, but then price broke out up there. Pending order was cancelled. And a setup 1 is a setup 1 until price stays across his purple line. So once it goes above the purple, I'm not looking for setup 1 because it can't create a setup for me like this where purple is, above. But I know one thing. I know, looking at the hourly chart and looking at how the market is moving, it is a bearish trend. It's going down. Elliott wave wise, this is your 3 and this is your 4 up. Now, I don't like wave 4 to be this impulsive, like pull back this much. So if you bring I don't use fib retracement in my trading when I'm doing it. For analysis, I would. Because, purple is 50% retracement. Very simple. I'll show it to you. Purple is very useful. See over here? 50% retracement, 0.5. Once it goes above 50, it's more than 50%. So my rule is that if wave 4 is more than 50%, I'm not interested. And that's why the purple becomes very handy. I don't have to draw, fib retracements. In this case, it's retraced more than 62%. So it's not that a wave 4 is not a wave 4 if it retraces more than 62%. but it becomes difficult. But the idea is in my head, the back of my head. Okay, I know what I thought was a 3 turned into a wave 1 now, because this is the new 3, right? If this is the new 3, this is my 1, this is 2, this is 3, this must be 4. So let's mark it. So now I can mark this as wave 1, this as 2, this as 3, this has to be 4, and the next one would be 5. Slight problem here. Actually, not a slight problem. See, the rule is wave 4 cannot go above in a bearish wave. A wave 4 should not go above the low of wave 1. Look at that. Pip wise, it's gone, but it doesn't have to be perfect. It almost stopped at the same zone, which was the London Open zone. So if I extend this box, you can see it. I saw this and I was like, okay. And at the same time, we saw this candle. So it's reacted to those levels. Price went down, did not break the box, started going up, and I'm watching it. I'm not thinking, okay, is it going to go above there? But it doesn't. Starts to go down. And as soon as it breaks this box, I'm thinking, all right, these are the levels now. So in my head, I'm going, okay, I want to know what it's going to do around this level. But using my knowledge of the 10-second Elliott wave concept, I know that this is 3 and 4, and if the next is going to be a 5, I need to find an entry. And I saw this candle over here. Now it might look like nothing to a lot of the people, but for me, it was really an exciting opportunity to actually take a 1% position, where if it just moved 5 points in my favor, I'll have a free trade. And that's exactly what happened. I took a trade with heavy lots, came down, and I was expecting this bounce. And at this point, I closed half of this position and stop loss was still up there. So that means it was free trade, price could come all the way up. I shared that in the trading room and I thought, okay, this is happening. And then it was going up and I thought, oh, well, it wasn't meant to be. But these two candles did not go above the high. And then I thought, all right, there you go. Now you have another entry here. Now I did not do the entry because I was already in my trades here. I just wanted it to go further down. So when it went down, now I was in profit. And then I saw, so based on those same levels, I see another pullback entry over here. So I added one more time. And then I waited for these levels. My target was the peak of 3. That's what it is. So the deeper the wave 4 is, then it's even better to have wave 3 as your target. Right? So this was my target. And then when it comes over here, I closed half of all these 3 positions and I waited because now I want to wait for wave 5 to happen, right? I wanted to hit target zone 1. So one final thing. These are a few of the tricks that I use on a daily basis. I'll draw this and that. And actually I need to go to the start of wave 1. Here we go. So the prediction is that if there is a wave 5, it's going to touch target zone 1, which is fib expansion 62%. And so it pulls back. So I made up the whole story, not made up, I told the whole story of the PC all the way from there, so that by the time I come to this point, you know what I'm talking about. See here, we have a 5 down going on, but inside of 5, we also have 1, 2, 3, 4, 5, right? So the first move down, peak of AO, no divergence, is your 3 of 5. Pulls back, you see a PC, right? Creates a perfect pullback entry again. But I was already loaded. All I wanted was this wave to complete so I can get out. But if I didn't have an entry there, I would definitely have entered here. PC and pullback. And there's another reason as well, which I will show you why this is powerful. I'll actually just mark it so I don't forget. Goes down, hits that level. That's it. I hit trail candle on the ATM, the Advanced Trade Manager script that we have from Steve, and it exited my positions on trailing candles over here. It's a beautiful campaign. When I'm able to hit trades like these, I'm really happy. Like this is that concept really playing out correctly, like candle to candle. So I hope this explains to Frank why this was not a setup one, why he shouldn't take it, because he's in stage one. You should be taking the perfect setup ones for the next 20 to 50 trades. Once you get that under your belt and your discipline score is 80%, you can go to stage two and try using the hunt methodology, which is the pullback entries. And then you can use, when you go through stage two and you're entering stage three, competent trading, consistency is there, discipline is there. Then you can start thinking about, okay, when I have the wave sequence in my mind, I know the wave is going in, it's not a setup one. What is in my armory? What are my tricks that I can use as an entry mechanism to get in? And that's what I use. So I knew I don't have a setup one, but I have other entry methods at my disposal to help me. So if I didn't catch the seed, I would have caught the pullback. If I didn't catch the pullback, I would have caught the setup 2 breakout here. If I didn't catch that, I would have caught the PC entry. You can't learn all of this in one day. You have to go step by step. So setup 1, which is this whole sequence. Setup 1 was here, setup 1 is here. So we had a setup 1 into wave 3. See, the setup 1 got us into wave 3. And then possibly, if it didn't go above purple, the setup 1 could once again have got you into wave 5 as well. All you need is one trade. So once you learn setup 1, then you can learn the hunt method, which is the pullback method here. Now, why is that important? It's because of this. So when I was trading setup 1s for years and years, and then when you take setup 1s and you draw those trade lines and you switch to the 5-minute higher time frame, see, like this, you find out that most of my setup 1s on the M1 chart were actually nice, lovely pullbacks on the 5-minute high time frame. So I learned that basically that bull flag pattern or the 5 to 7 candle clean pullback pattern is a setup 1. So why this was a beautiful setup? We have traders who trade the 12-second or the 15-second chart. So I'm going to go to the 15-second chart and I'll show you where I've marked. So if you have an idea of what is a setup 1, you now know this is that pullback, the PC pullback that I've marked, right? Let me see. Bring it to 2 charts at the same time so you can see it. So here you have the 1-minute charts. That's that pullback, and here you have that same pullback on the 15-second chart, not the completely the 5 times lower, but it's a 4 times lower, still does the job. See this pullback? So here you have a gator open, you have a pullback, you have a PC pattern, you have a peak of AO and dark candles, which is a hunt pattern. This becomes a hunt pattern, PC and hunt pattern. But on the lower time frame, it's a setup 1, fractal geometry, right? You have a 3 down, gator sleeps, purple is nicely hanging above it like a cloud, and you go short here and you have your add-on here, and bang, it goes. Within 1 minute, your target is hit. And that is, if you trade the 15-second chart, this would be your setup. If you trade the 1-minute chart and you trade the pullbacks, then it would be this one. So you can either take the pullback over here, and if you want confirmation, if you're more comfortable with setup 1, check it on the 15-second chart. If you don't have a 15-second chart, just get used to this pattern. This is 1, 2, 3, 4, 5. Here you have like 4 candle pullback. You can't call this a pullback because this broke the low of the previous candle. So 4 to 5 candle pullbacks are beautiful patterns, but you need to have 2 things confirmed before that. One, if you're like me and you use the Elliott wave sequence, the 10-second Elliott wave, not the really difficult one. The 3-4-5 mechanism, you want to use that. Or the second thing is you want to have the gator open. If the gator is open and price is moving, momentum, you want to use these pullbacks. So that's it. This is, I've given away my complete strategy. That's what it is. So I hope it was useful to you, Frank. Why this was not a setup point and why I traded it. It has to do with what stage of trading you are in, and you know, all of that. So there's no more chat in there. If anyone has any questions, I would be happy to answer. This was a fantastic opportunity here. See, on, you'll see it here on EMT4 chart. Yeah. Okay. So that's that seed entry that I got in here, right? It's an advanced entry. We used to call it the black dot entry as well. So we'd go short here, but I was going with the momentum and the wave confirmation. So got short there, one more add-on, and then on the pullback, 1, 2, 3 candle pullback and the break of box combined, added one more time. When I hit my targets over here, I closed half, and then I let the rest run. And as soon as this happened, so this is also the red dot entry. So you have the dark bars, and below this red dot you could go short, and that's it. Trailed the candle, got out there. Fantastic trade. After that, we are done. All right. Thank you everyone for joining, and I hope you learned something from this. You can use this pattern, learn this, and apply it to any time frame you like. And if you like the video, hit the like button, everyone, please, and remain subscribed to the channel. Thank you for joining, and if I don't see you again, have a great weekend. I was supposed to say do something new, but these days you can't really say that, so do something boring. Stay safe. See you later.